fingered Iran for this. And I think what this shows is, we are in a hybrid sort of a negotiation brinksmanship phase. President Trump is saying conciliatory things and sending Prime Minister Abe to be an emissary. So on the one hand, we're talking diplomacy. And I believe the Secretary said that today, the response today would be diplomatic and economic. On the other hand, there are these military provocations and incidents. I think people overlook just how desperate the Iranian regime is becoming, how bad that economy is. It's going to shrink 5 to 7% this year, according to the IMF. Inflation's 100%. The polls are awful. I think people maybe misunderstand how desperate the Iranians are to get some relief from this sanctions pressure.
So who has the leverage here? I mean, I would imagine the U.S. would have tremendous leverage because this shows how desperate Iran actually is. So what's sort of the last twist of the knife here? You
mentioned the right word, leverage. Iran has none so far. Under President Obama and President Bush, Iran was enriching uranium every single day. Their leverage was rising. Now they have none. So what does Iran have to do? Start to enrich and conduct illegal activities, which it's doing into the nuclear program, and then remind President Trump and the West that it can threaten the jugular of the global oil market. It can do what any American president would detest and hate, drive the pump price up. So that is what Iran is doing now. They're reminding us and reminding President Trump that they have some leverage. They're trying to get more leverage in this negotiation, though. Well, but I do think we're in a negotiation phase at this point.
I was going to say the oil market is not giving them that much leverage today. I mean, the idea that you've now had 6 tankers shot in effectively next to the Strait of Hormuz and the oil price has slumped 20-25% from its recent highs tells you what? Either that the market just thinks there's no chance of escalation or that the escalation wouldn't be that big of a deal.
I think that's right. And also that we have this bubonic plague of this demand downturn that is overriding, is an overriding concern. If you look at 2009, the end of 2009, how quickly demand collapsed, and we went from $143 to $33 in 6 months. Now, that was Lehman Brothers. That was a Great Recession. It doesn't have to be that bad. But boy, what the history of the oil market will tell you, if demand's starting to recede, and it'll go down before the data catch up to it, the oil price will collapse. I think that fear is even more powerful than smoldering tankers in the Gulf today.
So it sounds like I asked you, the last question I asked you before was, how would you trade this? It sounds like there's more risk to the downside than there is to the upside at this point in your view.
I think that's right. I think the risk is skewed down for crude oil prices. If I were an equity investor, I'd be making a shopping list. I think the risk is down, and these rallies we see on these Iran confrontations should be faded. Much depends on Osaka and the U.S.-China trade deal. But I think the risk is probably skewed down for oil prices.